Good morning and welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is October 13th. In the overnight session, we saw corn take a bit of a haircut, down 7 3/4, beans down 8, and wheat down 1. Yesterday, what happened? How did the market react to the WASDE report? Logan, can you give us a little analysis?
Yeah, well, in the WASDE report there, we didn't really see the fundamentals change for corn and soybeans that much. The big story, however, was wheat. 76 million bushels more wheat domestically than what we had projected. 5.4 million tons internationally. There's a lot of wheat in this market right now. How did this play out in Chicago? We take a look here at the corn-wheat spread chart. Yesterday, 18 cents built into this spread. You know, that's a fairly substantial spread there. At GeoGrain, though, we really like to focus on the cash market. And if you take a look here, we're seeing 43-cent premium on corn over wheat per bushel in the cash market. Right now, what we're going to be seeing is we're going to be seeing hog feeding operations, cattle feeding operations using wheat as a substitute for feed. Yeah. Now, we've seen kind of this trend develop since around early June. Yeah. Do you think that this is something that's going to continue? Are the fundamentals there to keep the spread intact?
Absolutely. I think the fundamentals are definitely there. When we're talking about, let's break that WASDE report down just a little bit more. Yeah. Well, we won't just talk about wheat. Well, let's talk about SRW wheat, so Chicago wheat. The ending stocks there were revised up 47 million bushels. That's a record high of 244 million bushels. We're talking about 73 million bushels over last year. Yeah. Bottom line, we got plenty of feed wheat. And we got plenty of feed wheat competition. We got Russia and we got Ukraine. Ukraine lifting tariffs. That should also put more pressure on it. So bottom line, we have plenty of feed wheat in this world, it seems, right now. Yeah. And that'll continue to weigh heavy on the price of wheat relative to corn. If this spread is to break, I would suggest that corn is going to be corn's going to have to blink first. Yeah. I think that's going to come in terms of production revisions. We didn't see it yesterday, but if we get a better view of really how this harvest is turning out, USDA could make a revision, and that I think will be the catalyst to affect this spread. Currently, I don't see any reason why it should change.
Yeah, absolutely. I mean, domestically, we could see revisions higher as far as U.S. production of corn, but internationally, we saw today China's reporting that 4.5 million metric tons more production coming out of their country than what the USDA had reported yesterday in WASDE. So, I got to think that this is going to weigh on this corn market a little bit more.
Yeah, I definitely think it's going to weigh on the corn market. I think the big thing yesterday was China was going to be a big buyer. We had speculation of 1.5 million tons of corn being purchased from either the U.S. or Argentina. We had the possibility of soybeans around 700,000 tons there, or 800. The bottom line is people thought that China is going to be in the market, and we're going to be looking for confirmation that that was, in fact, the case. It is interesting, though, that China comes out and says, yeah, we're going to have a bigger corn crop this year, when they're doing the purchasing. I would take this with a grain of salt. Any news out of China right now, especially when you're considering the fact that they're trying to replenish stocks, I'd be a little skeptical of.
So yeah, absolutely.
There's a good chance that it's weighing on the market this morning. We see corn down 16 pennies, and then wheat down 19. Beans is the only one holding in there, really, -2.
Yeah. With respect to the corn contract right now, we're seeing it sell off a little bit. On Tuesday, we saw an up limit day, but it's interesting to note that in that buying action, 15,000 contracts were taken off the table. So
the open interest.
Open interest was reduced 15,000 contracts. What does that say to us? It shows that shorts are covering. There wasn't a huge influx of buying coming into the market on Tuesday. It was more of a taking money off the table, if anything. So that should certainly also be taken with a grain of salt. Thinking about if this is the start of a technical rally.
Yeah, and we had mentioned that really on Tuesday morning prior to the massive movement that we saw. We were a little bit nervous that any sort of rally is to be a little bit questioned. I think it really started to snowball. People were getting nervous and taking off short positions in a hurry. Yeah. And of course, the USDA came out, no big surprise, traded about in a range, and now we're taking some of that off the table. Those gains may not necessarily have been warranted.
Right, absolutely.
We're going to take a quick commercial break, and when we're back, we're going to talk a little bit about geospatial basis and also about forward contracts. So we look forward to seeing you then.
Welcome back. Cody, let's take a quick look at the Fire Tip platform and see where we're trading this morning. We see corn continuing to go a little bit lower, down 17 cents on a December contract. Chicago wheat down 19 cents. So actually we're seeing that spread widen a little bit there. Earlier in the trade today, we saw, there's a little bit, there's a bigger gap there between the December corn and wheat contract. We've seen that close a little bit now. Corn's taking some off the table. But let's switch gears a little bit from Chicago. Let's see what we're seeing in the cash market right now. Basis coming into harvest.
Yeah, why don't we switch over here? I just want to show people, this is a lesson actually that Kevin talked about in Chicago. And it's really about forward contracting new crop, a new crop forward contract. Is it beneficial for a producer to lock in that forward contract earlier on in the season? And what we're seeing here, we actually took the price at harvest, and this is an average over many years. We took the price at harvest and we said relative to that price, or actually the basis at harvest, relative to that basis, do we see a discount throughout the earlier part of the marketing year?
Yeah.
And what you're seeing here is a significant discount all across the marketing year, and the strongest basis for this forward contract is actually during harvest. If we were to look at this and say, all right, how did this year measure up? Why don't we take a quick look? And you can see this is new crop corn basis. You can see there is a significant minus 55 basis here earlier on in the marketing year. We started to see that improve significantly, and the trend was always up. Going into September, we were trading down minus 32-ish, and now we're minus 24. So the basis has even popped more, and now we're in harvest.
Wow.
This is kind of holding that theory true that if you're gonna price these forward contracts, you don't necessarily want to lock in basis, because the strongest basis for the forward contracts is actually during harvest.
Wow. Well, that's a little bit contrarian, because you have this perception that during harvest we should see the weaker basis, but you're saying that as we approach harvest, maybe let the basis ride, look into an HTA, hedge it on the board.
Yeah. I mean, what you were saying is a really interesting point. I mean, everyone knows that basis is weak during harvest.
Yeah.
But does that hold true to forward contracts? We know it's true when it comes to spot, because we saw, in August we don't have the corn, and of course you see a premium put on that basis.
Yeah.
During harvest, you have plenty of corn, and there's a significant discount in harvest. But people know that, elevators know that, and so there is a little bit of a discount each year for that forward contract.
Yeah.
So, I mean, what does that mean to a producer going forward? Well, the 2012 crop, you may want to consider not necessarily locking in basis if you're trying to price a new crop corn. Let that basis ride. You can do that by hedging on the board. You're susceptible to margin calls at that point. You can do so by locking in an HTA, so hedge to arrive with the elevator.
Yeah.
The disadvantage there is you're locked into one location, and you can't find the best basis opportunity in your area. So, those are the ways that you can avoid this and pick up that premium that you otherwise might leave on the table if you price too early.
Yeah, well, it certainly sounds like there's a lot of ways for producers to take advantage of that or capture that basis improvement as we move into harvest. What are we seeing right now on the ground in the cash market?
Yeah, let's take a quick look. Right now, actually, in the last 12 days, we've seen basis increase on average throughout the entire U.S. by 4 cents. Okay, so I mean, we've seen corn come off significantly.
Yeah.
I don't think producers are too eager to sell at these levels.
Certainly not.
And elevators are having to increase basis to draw that grain out of the producers' bins off their combines.
Yeah.
So but what really shocked me today, you can really see pockets of significant strength right next to pockets of weakness. Notice, I mean, significant strength, southern Minnesota, and significant weakness. Michigan. These are areas where if you're in the weaker areas, you can go outside that and you may be able to capture an extra 10 to 15 cents by just hauling outside your normal marketing region.
Yeah.
And that's really what I want to stress. We have the tools to help you monitor these marketing opportunities. Please click anywhere on the show and it will take you to Grain Hedge, which is our website. Give us a call at 877-GRAIN-07. We'd be happy to help you market some of that grain, help you find some opportunities in the cash market that'll make you an extra 6, 10, maybe 15 cents.
Absolutely.
We'll see you on Friday.